Hello learners, welcome back to Lighthouse ERP Farm module. In the previous video, we completed accounts, journals, cash, bank, and journal entries, where we learned how actual money movement is recorded in the system. Today, we'll understand another very important adjustment process in accounting: debit notes and credit notes. These entries are used when a purchase or sales transaction has already been posted, but later we realize that some correction or adjustment is required. In real business scenarios, this happens quite often. For example, there may be a rate difference, a quantity mismatch due to quality of material, wrong tax applied, or goods returned after billing. In such cases, we do not edit the original invoice. Instead, we make corrections using debit notes or credit notes, so that accounting records remain accurate and auditable. In today's video, we will clearly understand what is a purchase debit note, what is a purchase credit note, when to use each one, and how these documents are created and approved in Lighthouse ERP. Let's begin step by step. What are debit note and credit note? A debit note or credit note is raised when there is a difference between the original bill and the actual transaction. In simple words, debit note amount increases, credit note amount reduces. These documents ensure that vendor balances remain accurate, tax values are corrected, financial records stay clean and auditable. In Lighthouse ERP, debit notes and credit notes are system-driven, approval-based, and directly linked to original bills. Where are they used? Debit notes and credit notes are used when rate difference is found later, quantity mismatch is identified, extra charges or deductions are required, wrong amount was billed earlier. Today, we'll focus on purchase side debit note and credit note, as sales side logic remains similar. Process flow, high level, no deep accounting. Purchase invoice, issue found, debit note or credit note, approval, adjustment in vendor account. Credit note, purchase, PCRNT. A purchase credit note is created when the vendor has overcharged, and we need to reduce the payable amount. This screen is used to create a new purchase credit note. Here, we select Series, Purchase Credit Note, Vendor Name, Original Purchase Bill Reference, Credit Note Date. This ensures the credit note is properly linked to the original purchase transaction. In this screen, item details are entered. You can see item name and quantity, rate and value, tax details like IGST or GST, final credit amount. This amount represents how much needs to be reduced from the vendor payable. Once details are verified, the credit note is sent for approval. After approval, vendor outstanding is reduced. Accounting impact is posted automatically. No manual journal entry is required. This listing screen shows all purchase credit notes, approved and unapproved records, credit amounts and vendor details. It helps accounts users track and audit all credit adjustments easily. Debit note, purchase, PDRNT. A purchase debit note is created when the vendor has undercharged, and the payable amount needs to increase. This screen is used to create a new purchase debit note. Here, we select Series, Purchase Debit Note, Vendor, Original Purchase Bill Reference, Debit Note Date. This connects the debit note with the correct purchase bill. In this screen, additional charges or rate differences are entered. You can see item details, revised values, applicable taxes. This debit note increases the vendor payable amount. After verification, the debit note is approved. On approval, vendor outstanding increases. Accounting entries are posted automatically. Purchase ledger stays accurate. This listing shows all purchase debit notes, approval status, debit amounts, It provides full visibility of all debit adjustments done in the system. Important points to remember. Debit notes increase vendor payable. Credit notes reduce vendor payable. Both are created against an existing purchase bill. Accounting impact is automatic. Entries go through approval workflow. Important practical notes. Original purchase invoice is never edited. Debit, credit notes create separate accounting entries, always ensure correct bill reference. Clear reason for adjustment. Approval before financial impact. Quick comparison. Very important. Debit note vendor owes us more. Credit note we owe the vendor less. Process summary. Debit notes adjust amounts upward. Credit notes adjust amounts downward. All postings are system driven. Vendor outstanding always remains accurate. This completes the debit note and credit note purchase accounting process in Lighthouse ERP. In the next video, we'll move to another very important practical process, bank reconciliation. So far, we have recorded cash transactions, recorded bank payments and receipts, made debit and credit adjustments. Now comes the most important question: do our ERP records actually match the bank statement? In the bank reconciliation process, you'll understand why differences occur between ERP and bank statements, how those differences are identified, and how balances are finally matched and confirmed. This step is crucial to ensure correct bank balances and reliable financial reporting. See you in the next video, learners. Thank you for watching, and happy learning.